market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Anna Edwards in London, in for Francine Lacqua this morning. Now, within the last hour, the European Union has said it will impose countermeasures against US tariffs. This follows President Trump's 25% tariff on steel and aluminium imports from all foreign suppliers. The levy will go into effect from March 12th.
So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel, and it's going to mean a lot of businesses are going to be opening in the United States.
President Trump also warned there are more trade barriers on the way, with cars and chips potentially the next targets. For more, let's bring in Bloomberg's EMEA News Director, Ros Matheson, who daily, Ros, you're on Tariff Watch and Tariff Alert, tracking the twists and turns of this story. Let's go to the European response first, shall we? Because this is the latest information that the market is dealing with. I suppose it's not a surprise in that Europe has suggested in the past that it might respond. But what do we make of the European response this morning?
Well, as you were saying, Europe has made clear that it's had this stuff in its arsenal. It's got lists prepared and it's ready to act if needed. But, taking a very careful approach to wait and see how Donald Trump was going to come at Europe specifically and when. And now we have obviously the news that this 25% tariff will take effect unless there are, again, exemptions or changes of mind, because we've seen that happen before with Canada and Mexico and also possibly in Australia. So does Europe also navigate a pass? And so we're seeing some strong language today, but also some fairly careful language, because they obviously want to leave room for there to be a negotiation between now and the 12th of March.
Yeah, and the Australian example, I think we're right to linger on it a little, Ros, because I think this is fascinating. It gives us a little bit of an insight into the types of arguments that might hold sway in Washington, because I understand that the Australians think they've got some sort of pass here because of the number of aircraft that they buy. So, that gets us looking for the Boeing export map and seeing who else might get an exemption.
Well, that's right. It's interesting to see the behaviour of each country, the way they're approaching Donald Trump on this. We saw Canada and Mexico be quite firm when tariffs were first announced, particularly Canada announcing countermeasures immediately, but also then behind the scenes looking for a way to negotiate and to say, OK, we will give Donald Trump something so Donald Trump can claim a win out of this, whether it's something to do with the borders, obviously, for Mexico and Canada on fentanyl, or security, in Australia's case saying, hey, look what we've got for you. So Donald Trump can say, well, I've extracted something from you and therefore I can hold off on these tariffs. And that seems to be how he wants to operate. You can see China taking a different tack, which is to say, fine, we are going to put tariffs on you in turn. We're going to hold off on having a phone call. That conversation seems to be crucial. Xi Jinping not necessarily having a conversation with Donald Trump about these tariffs. The leaders of Canada, Mexico, Australia opportunistically getting in there very quickly, and possibly now Europe. I mean, that's the question. Does Ursula von der Leyen need to pick up the phone to Donald Trump?
Yes, and talk to us about the status of that conversation then between the Chinese leadership and the US president. For a number of days we were on, phone call watch to see whether this call was taking place, what would transpire. The Chinese now, one assumes, dealing with tariff upon tariff from the United States, and are they talking?
Well, it's a bit unclear what conversation, again, Donald Trump was referring to. It's a bit like his comment that he has been speaking with Vladimir Putin from Russia. The question is exactly when have these conversations happened? Is he actually referring to a conversation with Xi Jinping that happened before he was inaugurated and not most recently with the tariff news? There's no indication from China that Xi Jinping has in fact spoken to Donald Trump since, and specifically about tariffs. And so that's again the question, is Xi Jinping holding fire, and for what reason? We do know there's a lot of conversation going on at a lower level between China and the US, a lot of back-channeling going on, and does Xi Jinping feel he needs to be in the best position to actually have that phone call?
Ros, thank you very much. Thanks for bringing us up to date. Ros Matheson there with the latest on trade tensions. Let's turn to the AI story, another theme we're watching very closely this week, and that the theatre of that conversation has, of course, moved to Europe. We'll be here with coverage of the of that summit in Paris in a moment. But OpenAI's CEO, Sam Altman, has rebuffed a $97 billion bid from a group of investors led by Elon Musk to buy the non-profit that controls the ChatGPT creator. Joining us now from that AI Action Summit in Paris is Bloomberg's Tom McKenzie. Tom, of course, all things AI, the subject of this conversation that you're having over in Paris. In fact, it looks as if we might have lost our connection with Tom, which is unfortunate. We are, though, seeing live pictures coming to us from the summit that's taking place in Paris. So this is an AI Action Summit, as the name suggests, and the delegates gathered. We understand that Justin Trudeau is there. In fact, we've had some lines from Justin Trudeau just crossing in the last couple of moments, saying tariffs on on Canadian steel and aluminium are unjustified. Canada's response will be firm and clear. So the Canadians seeing the need to respond to those sectoral tariffs that we've seen on some of those metals. So we understand that Justin Trudeau is there. We know that JD Vance is there. He has been spotted on the ground, and we know that he's going to be addressing the audience there. So the Vice President on the global stage, holding a number of important bilateral meetings whilst he's there, but also giving an interesting insight into his thinking around some of these important AI issues and perhaps some of the tariff stories and beyond. We will try and reinstate our connection with Tom coming up on the programme. We'll return to Paris in just a moment, plus we dive into how markets are reacting to the latest tariff news, as well as set you up for the Fed conversation ahead. We'll look ahead to Fed Chair Jerome Powell's testimony at the Senate later today. That conversation is next. This is Bloomberg.
On February 23rd, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in February 23rd, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back to The Pulse. I'm Anna Edwards in for Francine Lacqua this morning. So we've heard from Elon Musk. He's interested in bidding for OpenAI. Sam Altman at OpenAI says no thank you. Joining us now with the latest on that story and the latest on the AI Action Summit, which is taking place in Paris, Bloomberg's Tom McKenzie, who is surrounded by the great and the good of the tech scene, and so well placed to comment on this story. How serious is then Elon Musk, when he says he's interested in buying OpenAI? What do we understand his motivation to be?
I think we have to take Elon Musk seriously. The wealthiest man, of course, on the planet, someone who has the ear of the US president when he makes this bid. He's also lined up a number of big name investors behind this bid, again, according to reporting from the Wall Street Journal. So I do think we have to take this seriously. What his motivations are, the clarity there is a little lacking at this point. What we do know is that, of course, he was one of the founders of OpenAI back in 2015, along with Sam Altman. They have, of course, pretty dramatically fallen out. They are in a legal battle as well. This is a step change from Elon Musk in terms of the pressure that he's putting on OpenAI. It's another gear shift in that feud with Sam Altman. Exactly what he wants to get out of this, still unclear, but certainly I think the team at OpenAI and the investors behind Elon Musk and those invested in OpenAI should be and probably will be taking this fairly seriously.
Yeah, we're looking at pictures of where you are, Tom. We're looking at Emmanuel Macron, the French president. We're looking at the Indian leader, Narendra Modi, who I know is going to be speaking at this event. So many global leaders there, many leaders from the tech industry there. And I think OpenAI, Sam Altman, is amongst them. What is the conversation? How is the conversation going to evolve at this AI summit today?
Yeah, absolutely. The Indian Prime Minister has just walked in with President Macron just behind me, and prior to that, the JD Vance, the Vice President of the United States, of course. So they are here in terms of the leaders and the executives, as you say. It ties back to that Musk story around the bid for OpenAI, because this is a reminder that this is an arms race within these startups, within these businesses, but also an arms race at a sovereign and nation-state level as to who gets to control and shape the progress of artificial intelligence. And the debate on the ground here here is very much focused on that area. Should it be open or closed models? Should it be sovereignty first or startup first? Should it be about infrastructure or the value add? All of these are part of that conversation, and Musk's bid for OpenAI just accelerates and underscores that this is a national and international arms race right now. Macron was speaking yesterday. He was touting France's position and trolling to some extent President Trump, saying, look, we don't need to drill baby drill here in France. We just need to plug in because of the abundance of nuclear power. France also has a lot of software engineers. Europe does as well, well positioned on that front. This is clearly a France and this is clearly a European Union trying now to play catch up to the advances and innovations that we're seeing not just in the US, but also in China. And Chris Lehane of OpenAI talking to me yesterday saying that those are the two leaders, the US, and he described it, the Communist Party of China, and he wants to see democratic nations leading the charge on this. But this is a live debate. Who controls, who shapes it? Elon Musk to OpenAI, he's saying they have moved away from their mission around safety-focused open AI models, and that's why he continues to pressure that company.
OK, Tom, thank you very much. Bloomberg's Tom McKenzie joining us there from Paris. We'll be back with Tom later this hour for an interview with the co-founder and chief executive of Hugging Face. Yes, that really is the name of that company. And the co-founder speaking to Tom a little bit later on in programming. Now, stocks wavering this morning as the latest tariff news spurs caution among traders. Investors are also looking ahead to testimony from the chair of the Federal Reserve, Jerome Powell, and key US inflation data. Lots to discuss then with Sharon Bell, senior European equity strategist at Goldman Sachs. So I guess I'll start with the tariff story and then maybe pivot back to some of the AI and tech themes that we're dealing with this week as well. Sharon, I mean, we've seen tariffs imposed for the first time on Europe by this new Trump administration. And then we see Europe saying we will respond, and the Stoxx 600 is doing absolutely nothing. I mean, does this speak volumes about what we've already priced in, about what we learned from 2018? What does this tell us, Sharon?
I think both a little bit. In 2018, to the tariffs then, what we did see is the EU react, but react very proportionately, let's say. In fact, we think the sort of message from 2018 is that they only tend to tariff in retaliation about 50% of the value of goods that they were originally tariffed on. So, in a sense, I would absolutely expect retaliation. That's what they've said. The market was probably discounting that as well, expecting that retaliation. Also, as you showed earlier, the EU isn't the biggest trader in steel with the US either, so the impact isn't going to be as large as maybe for other places. OK, and so I suppose in terms of risk sentiment for equity markets, if we see the European retaliation going toe-to-toe with the US, then that might be, risk negative, because that would be something that would suggest this time around Europe's doing it differently. Yes, they're reacting more. I agree. I mean, that would be a bigger reaction than expected. I feel the market is expecting. And you know, China's already reacted as well to Trump's 10% tariffs on goods, additional 10%, and they too reacted in quite a proportional way. So I think that is now the pattern that's expected and discounted by markets. So if you saw a bigger reaction by the EU, it would be seen as upping the ante on the trade war.
We've just been looking at live pictures coming through us from Paris. I mean, Emmanuel Macron certainly managing to gather the great and the good of, global politics to some degree, and also plenty of tech leaders to try and pitch Europe's role in the tech space. Sharon, when you look around for investable opportunities in tech in Europe, are you seeing things change? Are we starting to be able to talk about Europe having more of a tech presence? Clearly, there are big names. We've talked about SAP and the like for a very long time. But how is that evolving?
There are a few big names in Europe, but it's a tiny portion of European market cap. Something like, 6 to 8% of European market cap is in tech, whereas in the US it's a third of market cap in the tech sector itself. And then there are other companies in other sectors that we probably would regard as quite techy as well. So it's much, much smaller in terms of the overall equity market and much smaller in terms of the economy. But we know that Europe wants to make progress on all these investments. So this is a good sign that you're starting to bring the leadership to Europe.
Yes, and then we have the French president then welcoming everybody, no doubt, and giving some opening remarks on this second day of the AI Action Summit in Paris. In terms of European stocks then, let's go back to that broader picture. We've seen real outperformance here to date from Europe, haven't we? I mean, Stoxx 600 up 8% or so, US stocks up 2% on the Nasdaq, 3% on S&P. Does that look justified? Does that continue, do you think, Sharon?
I know. It's been such a surprise to many investors. When we polled investors at one of our conferences in Hong Kong and another one in London in the middle of January, very, very few investors expected Europe to be the best performer. Now, to be fair, we asked them the question for the whole of 2025, and we'll see if that's maintained, this performance. But it has certainly been a surprise to a lot of investors that we've spoken to that Europe has done quite well since the beginning of the year, particularly because actually the economic data in Europe still doesn't look that rosy. We haven't really seen any of the fundamentals change hugely. But what I do think has changed a little bit is this idea that, in the end, US has also got some issues too. Tariffs could be inflationary, for example. There's concerns now with DeepSeek and how that's going to impact the tech industry in the US. Also, investors were already positioned and very in the US market. It's very concentrated, very highly valued. So it's a little bit of, I think, investors diversifying.
Yes. OK, so that suggests that maybe there was something for the US to lose as well as something for Europe to gain in terms of what we're seeing in markets. I wonder if we look ahead to the end of this week, we're going to be in Munich for a security conference.
Yes.
And I wonder whether the markets are starting to think about, and I noticed that we'd seen year to date some quite good performance from quite a lot of businesses in Eastern Europe. And I started to wonder whether the market is starting to ask itself whether we get a peace dividend out of Ukraine. Is that something that's realistically on your radar, or is it too early for that?
It's certainly on all investors' radars at the moment, because in the last couple of weeks you've definitely seen some of the stocks with perhaps most exposure maybe doing a little bit better. I do think that markets may be getting a little bit ahead in expecting that armistice or peace in Ukraine, because really we may still be a long way from that point. But I do agree with your point that if you were to move more in that direction, if we were to see that, that would clearly be good news for European economies, because likelihood that gas prices would come down a bit, that's very helpful. Also, you don't want a war on your doorstep, and all the financing that requires. So again, I think it would be helpful for Europe because it would bring down the risk premium. So all of those things, I think, would be helpful. And bear in mind, the European economy has been incredibly weak growth for the last few years, and particularly since Russia invaded Ukraine. So again, I think all of that would be a great signal if it were to happen.
Yeah, it necessitated such a huge structural shift in energy supply, didn't it? That the growth was taken out as a result. Thank you so much for joining us, Sharon. Nice to see you. Sharon Bell, Senior European Equity Strategist at Goldman Sachs. Coming up on the programme, we'll stick with the energy theme, in fact. Oil and gas giant BP has reported a sharp drop in profits and is pledging major changes to its performance strategy. We'll get to that next. This is Bloomberg. Welcome back. There's been a muted response in markets to BP's earnings today. This is the oil and gas giant pledges major changes at its upcoming strategy update after reporting a sharp drop in profit. For more, let's get to Will Kennedy, Bloomberg Senior Executive Editor for Energy and Commodities. So, Will, I know the buyback was going to be a focus for today. They maintained that. What stood out to you then from the BP earnings?
Well, the earnings were a little weaker than expected, but I think the most interesting thing we saw was actually the words that the CEO, Moen Elkenschloss, used in the update, which to say the company needed a fundamental reset. So all eyes now in 2 weeks' time when he delivers his capital markets update, where he's clearly going to set what he claims will be a radical new direction for the company.
Yes, and so that looks less green, does it, in short, the future?
I think that's certainly the way that it's going. He's already sort of tried to reposition the company away from the very major green direction set by his predecessor Bernard Looney, which was going to radically reduce oil and gas production and invest a lot of money in new energies. He's backed away from that. I think we can assume he'll back further away from that. Maybe announce some divestments of non-core assets to help buybacks.
Yes, and I guess we're trying to find out what it is that Elliott Investment Management wants before we get to that investment day.
Absolutely, and presumably they'll be talking. I think that they probably want something along those lines. They see that the company is undervalued and they think it's on the wrong strategic track, and they'll want measures that unlock some of that value, and that probably means really focusing on the core business and maintaining capital discipline.
OK, well, thank you very much, Will Kennedy, Bloomberg Senior Executive Editor for Energy and Commodities. Coming up on the programme, we'll go from the banking sector to the banking sector. UniCredit boosts investor payouts, but shares fall on fourth quarter earnings. We'll break down the numbers from the Italian bank. That conversation next. This is Bloomberg. Good morning and welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. The EU says it will impose countermeasures against US tariffs as Donald Trump slaps a 25% levy on all steel and aluminium imports. European earnings in focus. UniCredit falls with its profit outlook flat, but Kering gains on signs the worst may be over for the Gucci owner. Plus, no thank you. OpenAI's CEO Sam Altman rejects a bid from a group of investors led by Elon Musk, escalating the billionaire's feud. Thinking of all things tech, I should tell you that we are live at the Tech Summit in Paris. We'll be getting the latest from that AI Summit in Paris. Narendra Modi is currently speaking, the Indian Prime Minister, just one of the heads of one of the world leaders that we have in attendance. Justin Trudeau, the Prime Minister of Canada, also in attendance. So many conversations being had on the stage and behind closed doors, no doubt, as well. Those one-on-one conversations, all important. We know JD Vance is in the building as well. Let's turn from the European tech agenda to the European growth agenda. We're just getting lines coming through this morning from the IMF. Kristalina Georgieva is speaking at a summit in Dubai and saying that the US economy will likely continue being strong, but then goes on to say that she's particularly concerned about the European economy. And as we're thinking about AI over at that Paris summit, really interesting to see her thoughts on AI rather than focusing on the positives. One of the lines coming out of her statement, her address, is the IMF chief saying that AI is a tsunami hitting the labour markets. We will see how the labour market withstands that kind of pressure. So lots of lines coming through them from the IMF this morning. Let's return to that news about the EU saying that it will respond to any tariffs that the US imposes on the bloc. For more, let's bring in Bloomberg's Valerie Teitel, who's been tracking the twists and turns of this over the last 24 hours. Valerie, how are markets digesting this news?
Look, Anna, so far the markets are taking it in stride. They're saying no big surprise from the EU's announcement about retaliating to the US's tariff announcement on steel and aluminum. We have the Euro Stoxx 50 unchanged, euro dollar in the FX market broadly unchanged, and gold, which has been the safe haven of choice lately, also unchanged. Let's return to that gold story, though, because it has had a phenomenal rally in the first 6 weeks of the year, up some near 11%. A lot of this due to some safe haven demand, this tit-for-tat trade war escalation. This has been the safe haven of choice, Anna, but it seems like it's not very much reacting to the news today. What it could perhaps react to is some later announcements from Trump when it comes to the reciprocal tariffs. He has told us in the last few days that they are preparing an announcement on reciprocal tariffs to come either today or tomorrow. Bloomberg Economics did some great analysis on which economies are most exposed to reciprocal tariffs. They pointed out that it's mostly EM economies of Brazil, Latin America. You've got Africa and India being the most exposed. But I believe it'll be what he says in this announcement. Does he focus on the European Union in this announcement of reciprocal tariffs? We know he's had his eye on the European auto market. Does he perhaps tag that into that announcement of reciprocal tariffs? That could be some downside for the EU and perhaps another reason for the EU to respond with more tit-for-tat tariff retaliation.
OK, Valerie, thank you very much. Valerie Teitel with how the markets are withstanding pressure, standing up to the pressure that has been applied by President Trump and his tariffs and countermeasures then planned and suggested by the European Union. Let's return to all things tech. The LinkedIn co-founder, Reid Hoffman, Hugging Face chief executive, Clement Delangue, are among notable CEOs, entrepreneurs and venture capitalists to have signed an open letter calling for the creation of new global public goods in AI. This comes as world leaders and tech giants meet in Paris for the AI Action Summit. Bloomberg's Tom McKenzie is there for us. Tom.
Anna, thank you very much indeed. Yes, we'll ask about public goods with Clement Delangue shortly, but we'll start with the news of the day as well, Anna. Clement Delangue, as you say, the CEO and co-founder of Hugging Face, joining me here at the Paris AI Action Summit. Clement, thank you for your time.
Thanks for having me.
And we're going to get to that point that Anna was talking about in terms of public AI and what it actually means. But I want to start on the news of the day, Elon Musk's bid for OpenAI. Do you take this seriously? What could it mean for your space?
Well, I think it's an interesting conversation to have, right? A lot of people are talking about openness in AI these days and public goods here at the summit. So it's an interesting conversation to have about, OpenAI and kind of like their non-profit goals and how they can contribute to humanity.
Do you have a strong view? I mean, Elon Musk would say that they've diverged from their original founding mission of producing non-profit, safety-first AI that is open source? Do you agree that they've diverged from that and that's a problem?
Well, I think OpenAI have the ability to really contribute massively to the world. They obviously have already, but I would be really excited to see them doing more open science and open source AI. I know that Altman commented on it a few days ago, saying that they were considering doing more open source AI. I think that would be amazing for the world when you're seeing what DeepSeek has managed to do with an open source AI approach. You see some of the potential of scale of impact that this kind of approach can have.
So you think that's the direction of travel? Because you, of course, are a big advocate for open source. Yes. Not only do you build your own software, but you provide that platform for researchers and developers to access the latest models. So you think, ultimately, in the next year to 2 years, Google, OpenAI, Anthropic, they'll have to move to open source. That's the direction of travel, right?
It's possible because it used to be the case in AI. If you're looking at the time period like 2016 to 2020, most of AI was actually open science and open source AI, and that really fueled the progress, right? This idea that Google released a paper called Transformers that then OpenAI used to build GPT. Kind of like create this virtuous cycle where you accelerate the progress of the technology. So hopefully if we can do that more in the next few months, I think it'll be beneficial to AI and to the world.
Demis Hassabis from Google DeepMind told me yesterday he thinks that DeepSeek have misstated and exaggerated the extent to which they were able to build that model at a low cost. Do you agree with that assessment? You've played around the model, you've integrated it, you're using it. Do you agree with that assessment?
I think it's more like the media and kind of like the public comments that exaggerated it a little bit. But if you look at the research paper, they
this is our fault, is it? We exaggerated.
Yes. But if you look at the research paper, what they said that the last round of training for the model cost $6 million, it seems to add up. At Hugging Face, we're doing fully open source replication of R1, allowing anyone to train their own R1. And we're saying that what they stated in their research paper and what they released at Open Weights makes sense and is accurate.
Okay.
As a matter of fact, what's been interesting to see is that thanks to their very open release, people are building on top of it all over the world.
Are you worried about data privacy and cybersecurity risks around DeepSeek?
So that's part of the replication. That's going to be very interesting, and I was actually talking to Demis yesterday about this. When we're trying to replicate R1, which is made possible by the open source
model, DeepSeek's latest model is R1.
Exactly. We'll be able to see if there are any kind of like safety issue from the model. It doesn't seem likely, but it's always an interesting study, especially to be able to do it for like the next models, right? Because we're starting to see, I think, is like the safety risks of open source AI are quite inexistent for the current generation of AI, but maybe in a couple of generations, there's going to be more important issues to look at.
You've called, as Anna was saying, you've called for a focus on AI for public goods. What does that mean? Does that entail health data being packaged up in a safe and secure way? Privacy data? What are the concerns around the data? What does it mean? What data should be packaged up as part of public goods AI?
I mean, I think public goods means that not only the private sector can kind of like play a part in AI, but that public organizations, non-profits, civil society need to turn from being AI users to being AI builders themselves so that they can shape the direction of the field, right? I don't think it's healthy. I don't think it's sustainable for a world where the most foundational technology is only controlled by a couple of like big technology companies. We need to kind of like make it more available, understandable, and controllable by any sort of organization. So I'd be really excited to see more governments, more public organizations, more non-profits, more civil society being able to build their own models. Why not think kind of like the next DeepSeek coming from a public organization, from a non-profit, from kind of like civil society? I think that would be really cool for the world.
Clem, what are your fundraising plans? Are you an acquisition target? Are you IPOing this year? Where are you on fundraising IPOs?
None of the above.
None of the above?
We're lucky.
People have tapped you on the shoulder, haven't they, Clem, and made an offer?
We're lucky to probably be one of the few AI companies that is profitable.
You're profitable?
Yes, we are. We have tons of money in the bank. So at the moment, we're focusing more on kind of like building the platform for AI builders in the long run, to take a very long-term approach, and very happy and grateful to be in this position.
An IPO is still the goal?
Yes, to stay independent, because I think there's room for independent AI platform for builders all over the world. So that's the goal.
Could that be in the next 24 months?
No, probably not. Just because we don't need to. As I was saying, kind of like we're profitable, and AI is still, in my opinion, it's in its very early stages. Right? Even if we're talking about it a lot, even if there are now billions of users of AI, the technology landscape is still changing so fast, right? We're seeing that with DeepSeek.
Okay.
So our goal is really to kind of like reinforce our position as the most used platform for AI builders, and we're happy to do it like
Clement
that.
Delangue, CEO and co-founder of Hugging Face. Thank you very much indeed. Straddling Europe and the US, of course, headquartered in New York. Anna.
Thank you very much. Yeah, Hugging Face with tons of money in the bank. A nice line there from the CEO of Hugging Face. Thanks to Tom McKenzie at the AI Action Summit in Paris. We'll take a short break. Coming up on the programme, we will have more on those UniCredit earnings. That conversation is next. This is Bloomberg. Welcome back to The Pulse, day 2 of the AI Action Summit in Paris, where the US Vice President J.D. Vance is giving a keynote speech in front of a number of world leaders: Canada's Trudeau, India's Modi, CEOs like the OpenAI CEO, Sam Altman is there, Alphabet's Sundar Pichai. Let's just listen in for a moment.
And finally, number 4, the Trump administration will maintain a pro-worker growth path for AI, so it can be a potent tool for job creation in the United States. And I appreciate Prime Minister Modi's point. AI, I really believe, will facilitate and make people more productive. It is not going to replace human beings. It will never replace human beings. And I think too many of the leaders in the AI industry, when they talk about this fear of replacing workers, I think they really miss the point. AI, we believe, is going to make us more productive, more prosperous, and more free. The United States of America is the leader in AI, and our administration plans to keep it that way. The U.S. possesses all components across the full AI stack, including advanced semiconductor design, frontier algorithms, and, of course, transformational applications. Now, the computing power this stack requires is integral to advancing AI technology. And to safeguard America's advantage, the Trump administration will ensure that the most powerful AI systems are built in the U.S. with American-designed and manufactured chips. Now, just because we're the leader doesn't mean we want to or need to go it alone, of course. And let me be emphatic about this point. America wants to partner with all of you. And we want to embark on the AI revolution before us with a spirit of openness and collaboration. But to create that kind of trust, we need international regulatory regimes that fosters the creation of AI technology rather than strangles it. And we need our European friends in particular to look to this new frontier with optimism rather than trepidation. Now, the development of cutting-edge AI in the U.S. is no accident. By preserving an open regulatory environment, we've encouraged American innovators to experiment and to make unparalleled R&D investments. Of the $700 billion, give or take, that's estimated to be spent on AI in 2028, over half of it will likely be invested in the United States of America. Now, this administration will not be the one to snuff out the startups and the grad students producing some of the most groundbreaking applications of artificial intelligence. Instead, our laws will keep big tech, little tech, and all other developers on a level playing field. Now, with the President's recent executive order on AI, we're developing an AI action plan that avoids an overly precautionary regulatory regime while ensuring that all Americans benefit from the technology and its transformative potential. Now, we invite your countries to work with us and to follow that model if it makes sense for your nations. However, the Trump administration is troubled by reports that some foreign governments are considering tightening the screws on U.S. tech companies with international footprints. Now, America cannot and will not accept that, and we think it's a terrible mistake, not just for the United States of America, but for your own countries. The U.S. innovators of all sizes already know what it's like to deal with onerous international rules. Many of our most productive tech companies are forced to deal with the EU's Digital Services Act and the massive regulations it created about taking down content and policing so-called misinformation. And of course, we want to ensure the internet is a safe place, but it is one thing to prevent a predator from preying on a child on the internet, and it is something quite different to prevent a grown man or woman from accessing an opinion that the government thinks is misinformation. Meanwhile, for smaller firms, navigating the GDPR means paying endless legal compliance costs or otherwise risking massive fines. Now, for some, the easiest way to avoid the dilemma has been to simply block EU users in the first place. Is this really the future that we want? Ladies and gentlemen, I think the answer for all of us should be no. Now, there's no issue where we worry about more than regulation when it comes to energy. And again, I appreciated the comments of so many at the conference because they recognize that we stand now at the frontier of an AI industry that is hungry for reliable power and high-quality semiconductors. Yet too many of our friends are deindustrializing on the one hand and chasing reliable power out of their nations and off their grids with the other. The AI future is not going to be won by hand-wringing about safety. It will be won by building, from reliable power plants to the manufacturing facilities that can produce the chips of the future. Now, at a personal level, what excites me most about AI is that it is grounded in the real and the physical economy. The success of the sector isn't just a matter of smart people sitting in front of a computer screen and coding. It depends on those who work with their hands, even as robotics will change our factories. It will certainly make our healthcare providers better at treating diseases, but it will also depend on the data produced by those healthcare providers, by those doctors and nurses.
J.D. Vance, the speech he's giving to the AI Action Summit in Paris, the Vice President of the United States, of course. Bloomberg's Tom McKenzie is on the ground there, and we can go right to one of our top stories. He's talking to Sam Altman. Tom.
Anna, thank you very much indeed. Yes, the CEO, of course, and co-founder of OpenAI, joining me right now at the Paris Action AI Summit, Sam Altman. Sam, of course, the headlines right now, Elon Musk making a bid for OpenAI. Your response, you're turning him down for $97 billion.
I mean, look, OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and has raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff. Now this. And we'll try to just put our head down and keep working. Does it make it more difficult to move from that non-profit model to that for-profit model for OpenAI? We're not moving to a for-profit model. We're not sure we're going to do it all, but no matter what, the non-profit will continue to be extremely important. It will drive the mission. It will continue to exist. The board is looking at lots of options about how to best structure for this next phase, but the non-profit is not changing into anything or going anywhere. Okay. What is your main mission here at the Paris
AI Action Summit. You got Stargate. There's question marks about how much you're actually going to commit to that. Maybe you can give us some numbers on that, Sam. What is the messaging here from you and the team?
So I've been to an earlier version of this at Bletchley Park, and that one was more focused on safety. This one, people are still talking about safety, but really I think people are now saying, okay, this technology is here, it's having an incredible impact, we've got to drive it. There is a lot of questions about how people can, maybe the most common question I've gotten is, can you do a Stargate in my country? We need infrastructure here, we want to do this, can you help? So that's been a common one. But a lot of other things about just how are we going to deploy this technology to make sure people benefit, where's it going to go, in what ways is the model going to improve. Last week we launched this thing called Deep Research. There's been a ton of questions about that, how can we use this to really drive economic growth, but yeah, maybe economic growth has been the single biggest theme here.
And have you had clarity on DeepSeek? I know you and the team have been looking into that, whether they distilled, whether they inappropriately used your inferencing data. Have you had more clarity on that?
Whether they did or didn't,
they a challenge,
they
a threat?
Built a good model. Many people will distill from many other models. Again, I feel so confident about our research roadmap and also our product roadmap that, DeepSeek will do whatever DeepSeek's going to do. Other people do whatever they're going to do. And we're just going to try to build the best technology we can and get it into people's hands. And I think that's mostly going pretty well.
Do you think Musk's approach then is from a position of insecurity about XAI?
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's a happy person. I do feel for him.
Okay. Do you worry that he has this proximity to the president and that he can influence the decision-making of the US presidency and policies around this agenda on AI?
Not particularly. Maybe I should, but not particularly. I try to just wake up and think about how we're going to make our technology better.
Okay. Sam Altman.
Thank you.
Thank you so much. CEO, co-founder, of course, of OpenAI. We appreciate your time. Anna, back to you.
Tom, thank you very much. Tom Mackenzie there at the AI Action Summit with the OpenAI CEO. Sam Altman. Incredible lines coming out of that. Obviously, we knew that he was turning down the approach from Elon Musk, but we're really good to get some more detail there. Now, let's pivot to some other earnings stories. Kering shares gaining today, with investors encouraged by better-than-expected profit and signs of stabilisation at Gucci. The company's biggest brand has struggled in recent years from a sharp downturn in demand. For more, let's talk to Bloomberg Opinion's Andrea Felstead, who's with us now. Andrea, so the stock's up 2.7% this morning. What did we learn?
Well, everyone thinks that Gucci's stabilising. I'm not quite sure. The final quarter didn't see any improvement in Gucci. It was down 24% versus 25% in the third quarter. Most other brands have seen a genuine improvement, so that's a bit worrying. They've just parted companies with the designer Sabato De Sarno. They're now talking about a new designer who's going to inject more fashionability and desirability into the brand, but they want to build on the elegant base. Well, that hasn't really worked so far, so I'm a little bit sceptical and a bit puzzled why the shares are up.
Right. So we're waiting for another designer, aren't we?
Exactly.
And that's the next thing, Andrea.
Exactly. And the rumours, the speculation is focusing on Hedi Slimane, who was at Celine, which he did a very good job at Celine. He did a good job at Saint Laurent. But he's got a very particular look, sort of streamlined, slim silhouette.
Yeah.
Whether that works with Gucci, I'm not sure. I think if he joined, it would be going back very much of the sort of Tom Fordy era at Gucci, the sort of sleek, sexy silhouette, rather than the maximalism, big logos that won them fans more recently.
OK, the big logos are back. Andrea, thank you very much. Andrea Felstead from Bloomberg Opinion with the latest on that sector in focus. It's been a busy show this morning. We're going to go back to Paris. The US Vice President J.D. Vance is still speaking at the AI Action Summit in Paris, talking about America's plans for AI and what others can do in conjunction with the United States. Let's listen.
The Trump administration will guarantee American workers a seat at the table, and we're very proud of that. Now, I've taken up enough of your time, so I'd like to close with just a quick story. This is a beautiful country, President Macron, and I know that you're proud of it and should be. And yesterday, as I was touring Les Invalides with General Gravette with my 3 kids, he was kind enough to show me the sword that belonged to America's dearest international friend from our own revolution, of course, the Marquis de Lafayette. He let me hold the sword, but of course he made me put on the white gloves beforehand. And it got me thinking of this country, France, and of course of my own country, and of the beautiful civilization that we have built together with weapons like that saber. Weapons that are dangerous, in the wrong game.